Hello, everyone. Thanks for joining us and welcome to Fintech Junction's first virtual event for 2020. I'm Ben Peled and with me is Asaf Lavi, and we're both from People and Computers, the company organizing the conference. We have over 1,000 registered attendees and 3 hours of content on fintech, on financial services innovation, especially in the age of coronavirus. Asaf?
Thank you, Ben. You're invited to chat with our experts throughout the sessions and visit them at their booths. Of course, you're welcome to our B2B meeting platform to meet new clients, new vendors, and new distributors. Should you have any difficulty to reach out to that specific person you wanted to talk with, please reach out to us. We'd love to help.
Hi, I'm Hisham Abdul Halim. I'm the staff PM at Intuit IL. Intuit is a proud maker of TurboTax, QuickBooks, PreConnect, and Mint. Today we'll be discussing how AI, artificial intelligence, is a quality driver to modern financial future. AI, or artificial intelligence, is a force for good that helps us to design and reshape the way we develop our applications today. Actually, we do see a huge revolution in its way on how we provide our experiences, how we maintain a good financial health of our health status, how we make our financial decisions more accurate. There is a huge debate on how AI is replacing or how it's supporting different occupations, but we do see AI as a force that supports our human interaction rather than replacing our human interactions. Even though it could automate different manual processes and cognitive processes, still we do believe that AI is a support force to our current solutions, our current business processes. The amazing thing about AI is it could serve as a backup source and a support source to our decisions while keeping our business values in place. Do we trust AI to manage our money? My direct answer would be yes. The way we see AI in money management today is aggregation of the large data sets, creating accurate decisions, and providing us a holistic picture and a rich picture of our money status. AI combined in financial services creates opportunities to businesses and to customers. It spans across multiple entities. Large banks use it today. Online and offline payments processors actually do have AI integrated into their solutions. And even though non-related tech players partnering with startups, they actually managed to develop machine learning algorithms and solutions that would integrate into their own business proposition. Looking ahead at our modern fintech and our modern financial future, we do see AI spanning across multiple domains. One of the biggest domains that we see is making better decisions in our financial portfolio. The ability to provide our customers more data, more insights, and not only relying on human input would actually provide us the ability to understand our decisions, to make our decisions more accurate, and to create a safe environment and a future for us and for our families. A second area we believe AI will support our experiences is to automate manual processes and ease the process of filing taxes and creating documentation. We do see our customers as the center of our business, and we do look at their experiences and support and build new solutions actually to support their causes. A third area we believe that AI can help us with and help our customers to gain a better experience would be the customer success. We do see text chats and chatbots as a source of help to our customers, to provide them the ability to make better financial decisions and ace the process of handling their issues. Last but not least, smarter predictions can allow our customers to make their business decisions in a much accurate way. Using large volumes and aggregations of data will allow us to create more insights and give them the ability to decide whether their financial status requires new decisions to be made, potentially improve sales, recruitment processes, and any other business operations areas that they seek advice on. Thank you. I'm Hisham Abdul Halim. Thank you for listening. You can find my contact details in my slides.
Hello everyone, my name is Sagiv Greenspan, General Manager of Finastra Israel and General Manager of Payments globally in Finastra. I'm excited to be here. Today we're going to talk about fintechs on the day after COVID. But maybe before we start, for those of us who doesn't know Finastra, we are the third largest fintech in the world, roughly 11,000 employees, $2 billion of yearly revenue. Operating in many countries, roughly 8,000 customers. All of them are financial institutes. You can see some of our statistics on the screen. More than 50% of the total syndicated loan, 175 million retail banking, 27% of all US financial institutes are ours, etc., etc. Here in Israel, we are running the payment line of business. And the payment line of business is one of four Finastra line of business. You can see more than 300 customers running 23 trillion US dollars in payments a day, 25% of the US Fed wires, 40% of the UK faster payment, etc., etc. So let's talk about fintech in the day after COVID was introduced to us. But let's start with how was 2019. 2019 was a fairly good year for a financial services industry. We enjoyed a fairly strong growth, roughly 5 to 6% globally. In payments, it was even 12%. Emerging markets was sometimes 18 to 20%, depends on the geography, but overall, strong growth. We had all-time high investment in fintechs. If you compare 2019 to 2010, 10 times more, from about 4.6 billion to about 42 billion. Challenger and digital banks were growing fast, and we were enjoying innovation almost throughout, even powered by the regulation, such as open banking, PSD2, etc. So overall positive. And then came COVID-19. Which introduced to us a whole new reality. We saw a reduction in 40% in deals in the last quarter compared to the same quarter last year. Everyone started shoring up cash, 27% reduction in investment in fintechs, and the slowdown is supposed to be until probably a year from now, with recovery of 1 to 3 years after that. However, as always, not everything is rainy. With every rain, there are opportunities. COVID-19, we say, has brought the future forward. We believe that there are all kinds of things, such as digitalization, that were supposed to take few years, will now be accelerated and will take few months. As Klaus Schwab said not long ago, in the new world, it's not about the big fish who eats the small fish, it's the fast fish which eats the slow fish. And so let's talk about the opportunity. Where do we think the opportunity is? And I will categorize them into four. First of all, the acceleration of digital, the digitalization of payment, digitalization of banking, everything related to e-commerce. The lack of travel will accelerate digitalization as well. People are even afraid to touch dirty money, so they prefer everything to be digital. The second thing is the increased focus on risk. So the technology will enable automation of KYC, automation of AI and machine learning, of evaluating risk of either consumers or companies, and the technology will accelerate that. Revenue compression will force innovation, whether it's going to be payments such as e-wallets or social payments, or even intelligent customer retention. The fight over customer retention will grow. And of course, streamlining of cost efficiency, reducing the TCO. All of these will increase adoption of cloud and focus on cybersecurity and fraud. Now, when we see all that, we see the need. However, we see that the banks are still struggling to accelerate innovation. We can see that 40% of the bank still believe that they have struggled to apply innovation quickly. 21% of the banks believe that their system are inhibitors in order to move faster and be flexible enough in order to apply innovation. So the banks have basically few ways of how they can move forward with innovation. One is to build their own, but that of course is costly, it's slow, and they need to invest everything that they need to do, they need to invest it themselves. They can do a buy, which is a combination of product and solution, but that's still something that requires integration, and of course they cannot monetize it themselves. The newer way, and sometimes the most attractive to some of the banks, especially the ones that are more innovative, is the collaboration. Take the bank as a platform, connect their core with APIs into the outside world, and add on top of it a marketplace, which is connecting the buyer and the seller. But the financial industry did not invent the platformification. There are many industries that are going through a similar process. Just as an example, let's take the hoteling industry. What you can see on the screen is the website of Starwood Hotels, whether it's mobile or on a laptop. And you can see what's under the hood. You can see that there are a lot of platforms. Some of it is enablement, some of it is partners, some of it is a broader ecosystem, some of it is even competition. But whether it's the booking itself or the event and meeting or the concierge services, all of it is enabling the hoteling platformification. So let's go back to the financial industry. Basically, there are few ways to do this platformification. One is the direct and third-party integration, so basically point-to-point bespoke integration. The second option is build your own platform, which is still fairly expensive, but you do have the access, but you cannot monetize. Or you can use a dedicated financial services platform that allows you to move faster, much cheaper, build on your own success, pay as you grow, and you have access and you can even monetize it. And for that, Finastra introduced about a year ago the open development platform for financial services called FusionFabric.cloud. And the FusionFabric.cloud it started from our core. We build on top of it the platform with open APIs into the cores and created a connected experience with intelligent data running between and the open ecosystem that allows the ecosystem to develop, whether it's a fintech or the bank itself or any other partners, to develop on top of the core and introduce rapidly new services into the market. The FusionFabric.cloud has the Fusion Creator, is how you build the application, the Fusion Operate, which is how you operate the application, and the Store, which allows you to publish whatever you develop on a store for you to consume or for others to consume as well. It has all the cores, and it has everyone that can consume the applications and create whatever you want to create. Inside the platform itself, it has the feedback loop, the accretive feedback loop. The more consumers there are, create more producers. More producers create more data flowing within the system and into decision automation, which create more consumers. So, for summary, FusionFabric.cloud allows you to innovate faster, cheaper, and invest as you grow. We invite all the fintechs that want to connect to FusionFabric.cloud. Please join us to this journey of the platformification of the financial services industry. Thank you very much.
Hi everyone, it's great to be here in the virtual edition of Fintech Junction, though it's a bit weird to talk in front of the camera. So I think I speak on behalf of all of us, hoping that we can soon have these sessions and events face to face. My name is Shachar and I work for Visa. Visa is a global payment network. So Visa allows you consumers to pay online, offline, to pay anytime you want, anywhere you go, using a mobile device, a Visa credential, and we've been able to get to that scale and reach by building a Visa network. The Visa network today allows Visa cardholders to pay at over 60 million merchant locations across 200 countries. And we were able to build this payment network by building the VisaNet. The VisaNet is a foundation technology layer of the Visa payment network. We've started and we've built this network in the past 60 years, and we've started by bringing financial institutions, your issuers, your acquirers, to connect to the Visa network. And in the last few years, we've actually reopened the network to allow technology companies to connect to the Visa system as well, whether it's big tech companies or also small companies, early stage startup that wants to work with Visa, use Visa capabilities, issue Visa cards, and allow them to grow their business together with Visa. Now, as an important engine in the global economy, Visa has the responsibility and the commitment to support global economy and business get back on track post-COVID-19. And we're doing that in a few different ways. One, we're supporting economic relief into Europe. First, we're supporting SME small businesses, which for no doubt have been hit the hardest during COVID-19. Second, we're supporting merchants to help them accelerate their digital journey, allow them to sell online quickly. We're also making it easier for consumers to pay with contactless cards and mobile devices, which have become more popular during COVID-19. We're also working with public transport operators to allow them to migrate from closed-loop ticketing to open-loop payment ecosystem to allow consumers to make seamless payments with their payment cards at the public transportation when they go on the bus or on the subway. And finally, we're also supporting governments to allow them to distribute economic relief using Visa capabilities such as push payments and Visa Direct. We're also leveraging the Visa data to generate smart insights. Visa as a payment network processes hundreds of billions of transactions per year, which gives us the perspective to generate smart insights, whether it's consumer behaviors, changes in consumer behaviors, identify shifts and trends, identify pockets of growth, and feed that data into our clients and partners to allow them to get to faster relief from COVID-19. And finally, security. As payment flows have shifted online, Visa as a payment network is committed to the trust and the resilience of the ecosystem. So we're putting a lot of emphasis on security. We're continuing to invest in our infrastructure to make sure our system is reliable and available. We're preventing risk and fraud and innovating. And finally, we're giving consumers trust by standing behind them. In Europe, we're also expanding the what we call Where You Shop Matters initiative to allow millions of SMEs to get to economic relief with the support from Visa. So one, we're supporting SMEs, small, medium businesses, by again giving them a platform, tools, connect them to partners which can help them accelerate, sell online, and get moving faster with digital transformation. Second, we're helping micro businesses, small SMEs, freelancers to start selling online. Third, we're enabling consumers and encouraging consumers actually to buy at SMEs. And finally, the Visa Foundation has announced a $210 million financial relief for the COVID-19 impact. We also believe that innovation has a big role to play in the way that we bring now new digital solution and innovation. So we have a network of global innovation centers and teams that help accelerate and bring the solutions to the market. We have a set of various innovation programs which will help us to rely and accelerate the innovation. One is the Visa Developer Platform, which is a platform for API capabilities, whether it's payment, risk and fraud, data and loyalty, which fintechs, banks, merchants can actually plug into and embed those capabilities in their solutions. Second is our global network of innovation centers, where we closely work with our clients to solve real business problems using co-creation and design thinking. Visa Ready program is our program that allows vendors and solution providers to get their certification with Visa and help them distinguish themselves from the payment ecosystem, whether it's solutions for mobile point of sale, transit solutions, authentication, and more. The Visa Fintech Fast Track is a program that targets fintech and early stage companies which wants to start their issuance program and wants to issue a Visa credential, whether it's for other companies in a B2B mode, whether they want to embed a Visa card as part of the solution to enable, for instance, a cross-border B2B transaction, or issue a Visa cards directly to consumers. So we put in place various programs and tools, whether it's issuance, faster onboarding, commercial incentives, to allow these fintechs to get started on the journey together with Visa. Visa Ventures is our global ventures program where we make strategic investments predominantly in platforms or consumer-driven solutions which can make a great impact on the payment ecosystem. And finally, our global partnership program works with strategic partnerships and help them grow and scale their business across the world. As a Tel Aviv team, we're obviously working mostly with the local payment ecosystem to help startups grow and develop their businesses, whether through issuance deals, partnerships, or venture investments. To date, we've made 2 investments in Israeli companies, one in Behalf, a company that provides SME lending, and the second is Charge After, which is a point-of-sale financing platform at the point of sale. What's nice for us to see is as the partnerships evolve, just last week it was announced that Charge After has made another milestone in the partnership with Visa by actually embedding a Visa capability called Visa Installment Solution and now launching it in the pilot in the US. So we're also starting to see those types of partnership where we're taking the partner solution, adding a Visa capabilities, and then leveraging the Visa scale and network to take it to the market. We're also working very closely with Visa clients, whether it's a bank in Bulgaria, Cyprus, Sweden, or UK that wants to plug into the Visa, to the payment ecosystem in Israel and leverage the benefits of working with Israeli startups. So we've done an innovation immersion visit in the past where a bank would come to Israel, see the payment ecosystem, and we would connect them to relevant startups. We're now transitioning that to kind of like a virtual session, and our banks appreciate and see a lot of value in working with Israeli startups. And we're also working with companies, as I said, to build new value propositions to our banks across the globe. Thank you very much, and hope you enjoyed the session.
Hello, everyone, and thank you for joining us today to talk about data for financial services, developing solutions for the future. My name is Andrea Hall. I'm the Manager of Implementation Services at FormAssembly, and joining me today is Hannah Tomilton, one of our implementation managers at FormAssembly.
Hi, everyone, and thanks for being here too, Andrea.
So let's start with who we are. FormAssembly is the leading enterprise data collection platform dedicated to helping organizations streamline processes and navigate even their most strict standards for data security and privacy. We have 4,000 customers, 3,000 or more of which are also Salesforce customers. We are GDPR and CCPA compliant, and our compliance cloud plan is also HIPAA compliant and PCI DSS Level 1 certified. FormAssembly makes it easy for people like you to create forms, collect data, and send that data to a wide range of popular systems. Hannah and myself are both part of FormAssembly's implementation services team. Our implementation team works to provide professional expert help when it comes to building out your form solutions. We offer a handful of services, including onboarding assistance, form reviews, form building services, personalized consulting calls, and group training sessions. So let's talk about how financial services benefit from using FormAssembly. We have quite a few key certifications, but most importantly, we help you achieve safe and compliant payment card information collection with PCI DSS Level 1 certification on the Compliance Cloud plan. We offer a sensitive data feature to help distinguish form fields you need for sensitive data control, including when you collect credit card codes, social security numbers, and other personal information. We also offer many different user controls. As a FormAssembly admin, you can enjoy control over the forms you use, your organization's users, and other aspects of your account. Hannah, FormAssembly can simplify many processes for banks and financial institutions. Could you touch on a few common use cases?
Sure. So what we're seeing here are the top use cases for financial services. So for loan and financing applications, an example would be the SBA's Paycheck Protection Program, where the form could collect applicants' information for loan approval. For personal and commercial banking applications, this would allow information gathering and document uploads. If using Salesforce, you'd also be able to create new client records or update existing ones. And finally, for financial client updates, you can pre-populate a form with existing client information and have your clients update it.
Awesome. So our main question today, how does better data allow financial services companies to address an ever-changing landscape? We recently worked with a banking institution to quickly implement a new project that arose during COVID-19. Hannah, can you tell us more about the issue that the bank was facing and how Form Assembly helped?
Sure. So as you, Andrea, mentioned earlier, the implementation services team provides a variety of services from consulting calls to form building services that help progress your clients' forms. So together with Solvis Consulting, we worked with this banking institution to create a form specifically to collect information for the SBA's Paycheck Protection Program. So the requirements of the SBA were changing almost every day, and the bank needed to reflect those changes in their form. We originally built out one form for all the company types, but the requirements, specifically the documentation needed for small businesses, sole proprietors, and self-employed individuals were different. So instead of a single form, we did a multi-form process where each of the forms were specific to the company type. Before I show the form that we built out, I'd like to briefly talk about our COVID assistance program. So with Form Assembly's COVID-19 assistance program, we help those serving in the front lines. So we offer free compliance cloud accounts and implementation services to organizations with projects involved in the fight against COVID-19. So some common use cases are clinical trial screening forms, volunteer registration forms, donations, loan application forms, and more. With that said, I am now going to flip over to the form that we built out. This is the bank's PPP application form, where the first form in the process is called the program application form. And it provides information about the Paycheck Protection Program loan, who can apply, loan details and forgiveness, and the required documents. They're also asking a couple of other qualifying questions, such as if they are already a customer of the bank, and if not, they would be able to open an account with them via the form also and upload the necessary documents. Towards the bottom of this page, they're also asking other questions that would allow the applicant to move forward with the loan application. Additionally, they're also asking who is filling out the application, if you are the authorized representative or if you're someone other than the authorized representative. And the last page of this form is a business information part, where we ask who is or what the type of company, and also other information about the business, such as the business type, registration date, and towards the bottom of this form, the mailing address and the business TIN. If they are currently not a customer of the bank, they would be able to upload the necessary documentation. So this is a conditional section that's being triggered by the question on the second page asking if they are currently a customer, and if not, so they would be able to see this. So the conditional questions would allow people to answer only the questions that apply to them. The main difference between the forms for a sole proprietor, a small business, and a self-employed individual is this average monthly payroll calculation page in the form. So this is, by the way, the second form in the process where we ask for the total wages and additional payroll expenses and excluded payroll costs here at the bottom. So whatever they select on this page would trigger conditional upload fields in the upload attachments page. The one for small businesses and sole proprietors are pretty much the same. So they have this extensive list of documents that they need to upload in the form, whereas the one for self-employed individuals or individual contractors, we are only asking for the net income, and another question about receiving EIDL for payroll purposes. And there are only 4 documents that they need to upload. And with that said, I will pass it back to Andrea.
Awesome. Thank you for walking us through that, Hannah. That was a really very thorough form. So moving on, what main solutions did Form Assembly offer for the financial institution?
So because Form Assembly is an easy-to-use drag-and-drop web form builder, our implementation services team was able to keep up with the SBA's requirements and make edits to the form whenever needed. In addition to the information required for the Paycheck Protection Program, as we showed earlier, the form also allows non-customers to submit their information to be able to open an account with a bank, and that includes uploading the necessary documents needed by the bank. We also created a business information form that redirects to a second form based on the company type that they select, where the questions are very specific. You will only be required to fill out the questions that apply to you. The connection to Salesforce was also seamless, and they were able to check on existing clients versus prospects. And with the information already in Salesforce and sent to sales representatives and business advisors, they were able to reach out to their clients and create a more personalized experience with them based on the information they already had.
That's great. It sounds like we helped them solve a lot of pain points along the way.
We did.
So Hannah, can you also highlight a few features that are commonly found to be beneficial for all financial services?
Sure. So with a bank that we worked with, they were able to leverage advanced form and field calculations, as we showed earlier with the payroll calculation page and the upload attachments page. And also they had the opportunity to streamline internal business processes such as approvals and personal information updates. Form Assembly also offers Save and Resume, where for longer forms, respondents would not need to complete the form in one sitting. They would be able to save the response and go back to it and complete it whenever they can.
Awesome. Thank you, Hannah. So looking ahead, both now and in the future, financial services organizations have an obligation to implement high-tech solutions that protect customers' security and privacy while providing flexibility, enhanced user experience, and better data processes. Form Assembly helps you to revitalize your organization with better data practices. A few examples of that are tax information collection, customer feedback surveys, client onboarding, claim submission processes, information requests for private equity firms, broke or client change requests, mortgage application and documentation, and insurance application processes. So head on over to our website to start your free trial. Form Assembly does offer a 14-day trial on all of our plans. And that wraps up our session for today. Thank you everybody for joining us, and be on the lookout for a follow-up email with content related to financial services.
Hi everybody, great being here today. Just to introduce myself, my name is Mark. I'm managing the Applause operation in Israel. So for you that are not familiar with us, in a nutshell, Applause is the global leader in real-world testing. What we do, we provide the ability to test the digital experiences from the perspective of real customers at scale. So this is actually what we do. We use real people, real devices, and real use cases, and we refer to what we do as in the wild testing. So there are a lot of examples of digital experiences. Here on the slide, you'll find just three of them, three of common use cases or challenges that we find with our customers. The first one, obviously, how to create a better personalization at scale. Everybody would like and are looking to provide a personal experience to their customers and for their brand. Second challenge that we find, how to provide a smooth customer digital journey that could start from payment or maybe from onboarding, go to account opening, shopping, and so on. We would like this journey really to be smooth, and we would like to keep the consumer with us. The third challenge that we find is how to migrate physical customer activities into a self-service format. Again, not relevant for all the audience here, but this is something that we find in the market. So, seems pretty straightforward. What is actually stopping us here? So what is stopping us is the fact that simply real-life conditions are much more complicated than what you can design or test in the lab, if this is basically how you conduct your testing today. And the two main reasons for that is that environments in real world are much more complex. People can interact with you using a massive area of devices, of smartphones, of tablets, of browsers, and so on. Customers are using your solution in many different ways that probably you cannot even imagine, like using it in different countries, on the plane, at home, in the car, in a store, and so on and so on. In terms of behavior, every person uses your solution in a different way. And it's really impossible to predict how they're using it. So the feedback from real customers will probably be different from the software development team inputs that you'll get. So these are like really crucial points that prevent you to provide the perfect quality to your customers. So the question is, how do I reach and get closer to my customers? Because actually this is what we're trying to achieve. And here I would like to present Applause and how we come into play in regards to these challenges. Applause comes into play with a managed community of over 500,000 people, a global community which is the largest in the world. And imagine to yourself, wouldn't it be nice if you could select a team of testers on demand that meet your specific testing needs for that moment in time, allowing you really to choose which device to test, what location to test in, and the demographics to test with. Amazing. We can basically provide that using this very large community. And if you may question, okay, so who basically is a part of this community? So this is a blend that is assembled from professionals, like professional QA users or accessibility professionals, but we also have, as part of this crowd, average Joes that probably you would like also to get their input as people that basically simulate like real users of customers of your solutions. And if we come really in a high-level perspective and ask what kind of answers do we provide to our customers regardless the use case, so I would say that in general we provide three answers. Does it work? Does my solution really work as expected? The second question that will help you to answer is, do I like it? Do my customers like the solution? And the third question that will answer, can I pay for it? Can I really perform a full payment process using the solution, using a real credit card in the real world? So these are like three really basic answers that we help to answer. And we do that through a set of solutions that our customers can choose from. It starts from manual and automation testing, voice and AI training, accessibility and payment testing, and of course, different UX studies which can really contribute to the brand in understanding what customers are looking to get. If we'll get back to the three examples that I presented at the beginning of the presentation, I think that now it will be pretty obvious to see that using a crowd can help us solve these challenges. We can use our crowd in order to assemble a group that will help to train the AI algorithm in a way that cannot be trained in the lab. We can assemble a group of testers that will work with your solution and test the entire digital journey from the point of view of a real consumer. And of course, we can send testers to the field to conduct in the field, in the branch, testing and to provide to you back their feedback. In order to perform our service, it's really straightforward. It's split into three steps. The first step is to define your objectives. As you saw, we can do really a lot of different things using our community. So we would like to understand from you what are your objectives. Then what we do, we assemble a team, okay? A team of testers that will basically perform the testing. And third, we won't have time today to go over it, but we use our SaaS platform in order to provide you results and insights in real time. So you can find here on the side like three typical examples of 3 of our customers: Citibank, JP Morgan, and Google. And types of questions that we would probably hear at this stage: are you launching a new product or feature and need pre-production testing before you launch it? Are you expanding into new markets and need to test within the market or in another country? Or maybe you have a website, you're updating it daily, and you would like really to monitor it and to make sure that the updates were done properly, the localization was done properly, and so on. There are many, many use cases that we can address. As said, once we understand the needs, we assemble the community segment that will work for you. What is important to emphasize here, that this is a managed service. You as a customer are not required to work directly with the community. We assign a project manager. What we basically provide is a managed service, and that project manager understands your goals, your objectives with each release and each cycle, and is responsible to provide you the results through the right community group that he assembles. At the end of the day, the idea is to provide you the insights as close as possible to real time. We use our platform to do that. This platform also could be easily integrated to your bug reporting system if you have a Jira or another solution, to make the product team work very efficient. Just imagine that we provide your solution, put it in the hands of the community during the weekend, and on Monday, depends where, here in Israel on Sunday, and maybe in the States on Monday, when the development team comes back to work, they have already in the Jira all the reported bugs which could be reproduced and ready to work on. Just to end the presentation, saying that we put a lot of emphasis really to make sure that we provide value also for the technology teams, as said, making their work much more efficient, and also for the business, helping to keep the retention and really getting a very good understanding of the perspective of their customers towards their solution. Thank you very much. Again, great being here. Keep well, and thank you.
Good morning from Malta. It's a pleasure to be here with you today. Today I will touch briefly on Malta's perspective of innovation and its plans to leverage on technology. Technology, predominantly AI, DLT software, and even the convergence of these technologies within the financial services realm. We cannot talk about technological innovation without dipping first, however, into one of its main catalysts, that being the fourth industrial revolution, our present and our future. This industrial revolution is a little bit different from its predecessors because of a combination of different factors. We have more integrated circuits, microchips, we have more memory units to store information, we have more networks to enhance communications, more software applications as well that provide direct link to consumers and the operators. This is also prevalent, very prevalent as a matter of fact in the financial services area. We have more sensor capacity as well that allows software, including artificial intelligence, to analyze, to have access to data which was previously only accessible to the human mind. These technologies, even though to a certain extent they are unrelated, when joined together, so when they converge and mesh together, they, however, integrate the physical with the virtual world. And we see innovative functions, the likes of automation, autonomy, disintermediation, decentralization, arising from these foundational technology, thus recreating and reshaping existing sectors like the financial services industry. These foundational technologies are definitely forcing us to redefine and change many of our laws and legal principles. Here, adequate policy, laws and regulations are necessary to enable the functioning of the new digital economy and to mitigate as well risks associated with the fusion of the digital and physical worlds, and foster as well innovation. So we need to make sure that we tap correctly into innovation, and we garner as much value and wealth as possible. Within this context, we're seeing that harmonization, particularly between different laws, different members in different nations, is key. Because we're speaking about digitalization, we're speaking about a borderless medium, services which are provided within a borderless medium. We're seeing a lot of unprecedented legal challenges, and this will only continue to rise. And this in many areas of laws. Why? Because foundational technologies are disruptive as well, and we're seeing disruptive changes brought about by these technological innovations. Just to mention a few, we need to clarify rights and obligations around digital assets, programmable money, tokenization, cryptocurrencies, having value or mediums or in software. You have wallets where you have blockchain, DLT, okay? Everything on a borderless medium, and everything without human or with less human action and agency. So here we're redundant, we have to rely more on technology. That is where the problem lies, particularly when you have cybercrime, particularly when you have software bugs, particularly when you want to establish liability. To this extent, we started thinking about departing from our radical legal values to concentrate, to create something for this new reality. Whilst doing this, we noted as well that classical notions like freedom of movement of goods, people, services, and capital, which served as the main pillars in the EU, are to a certain extent being shadowed by free movement of data. The latter is gaining more ground. With the framework we are building, we want to try to avoid just having a functional equivalent law. We want to create a policy, we want to create tailored law to cater for this new reality. We want to make sure that we have smart regulation in a converged landscape. That's why we created a specific authority for this, the Malta Digital Innovation Authority. And we have as well established two sandboxes, one for financial services and one for technology. I'll be touching on these very, very briefly. The first piece of legislation which is going to be mentioned is ITAS. Here we realize that within this digital environment, within this disintermediated arena, software is playing a vital role. It's found in practically anything we do. It's found in devices and gadgets, all applications, so even in IoT, which is used as well by the financial services industry when they use beacons, for example. And software being one of the main drivers as well behind financial technology, which is Fintech. Software which in the financial industry as well is disintermediating the human agency. So here we have through automation, through decentralization, whereas before the target of the regulation was the human, whereas the trust factor was tied to the human, now these things are changing. We are redirecting everything towards the software. So here, with less human interaction, the software is playing a more pivotal role. So through ITAS, we wanted to create certification, which started as voluntary. We wanted to create as well an ecosystem where we can establish a new form of trust, where we can make sure that software can be made to be safe and apt for use, where you certify the blueprint, where this can be used as well as a tool, even though it is voluntary in nature, by other authorities, okay, particularly financial services, it could be health, it could be transport, where they mandate that, for example, software is certified for the particular licenses which are attributed. To this end, we have created specifically as well an authority dedicated for this remit. The authority initially used to cater exclusively for ITAS within DLT and smart contracts. We're expanding that, okay, because we're going to include IoT, AI, and other software, so other technology, innovative technology arrangements which might be used in other critical areas. We want to introduce the concept of certification. I repeat, even though it is voluntary, it can be mandated. Certification which will be the remit of the DIA and its auditors. Certification which at the end of the day will help establish that the software has been vetted by independent, a public authority. You address the code, that the software culminates, the application culminates into certification, where in the future we can establish as well better criteria for trust, because you can trust the software in that case. You can establish as well criteria for liability and responsibility, because you have certification. This will lead us as well as a platform to build a coherent AI strategy and ecosystem, where first and foremost we want to make sure that irrespective of decentralization, irrespective of any function and software, the human is always in control, is always central. So there, our first target is to preserve human rights and dignity. Then second to that, we want to foster innovation, user welfare, and market integrity. And all this within a balanced approach. So we want to make sure that the AI systems are safe, similar to other software, because at the end of the day, we want to cater for this new software reality, safe and secure, and made to comply with laws and rights throughout their operational lifetime. In this instance, okay, we are leveraging as well on a technology sandbox. A sandbox which will be run by the MDIA, where the MDIA can ask for more information if somebody wants to certify a particular technology that can be AI, okay? And it will be a testing-based, a tested platform as well, which will culminate in certification. So here we have crafted a specific sandbox to assist the authority and the market participants for this innovative function. We have, when speaking about Malta and financial services, we have to touch base as well with cryptocurrencies. Malta has been one of the first countries to tap into this area. So we created a specific VFA regime, which departs a little bit from financial services, still has MiFID principles, and it regulates and touches on all the services provided within the VFA regime. So it can be reception, transmission of order, dealing of government accounts, exchange, brokerage, ICOs, okay, operating as well wallet, because it's part of custody. And even here we have, apart from a very robust legislation, and we have catered for our AML rules, anticipating as well the 5th AML for this new paradigm. So we anticipated that as well. We created a specific fintech sandbox, which can as well include VFA, which can as well include cryptocurrencies providers. All this, in a nutshell, has been done because we're seeing that there's a strong dependency on software. There's a strong dependency on digitalization. There's a strong dependency as well, and we've seen this during the past as well, COVID pandemic. There's a strong dependency on this technology, with, at the end of the day, with its sheer and relentless speed, is leaving us there to just watch the innovation. We cannot watch the innovation. We need to be active actors in this innovation. We want to be active actors in planning our future. And we should never lose focus of our rights and roles. That is why we started creating a framework to build the pillars to make sure that we are always there and we are always active actors. Thank you, and bye from Malta.
My name is Olivier Elbaz. I run for Salesforce Israel our business. Been with the company for close to 10 years. And today I wanted to speak to you about what we've been going through, what you have been going through as an industry, what we have been going through as a vendor supporting that industry, and what we have done in order to better support our communities, and what we have done from an innovation perspective, actually support organizations and government, to go through this crisis. So, this crisis is a public health crisis. It's a business crisis. It's simply like the biggest crisis we've ever been with. And I think one of the biggest challenges that we have is that we simply have uncertainty. When we had the crisis in 2008, it was a financial crisis, and that financial crisis we have actually gone through. So it's true that some of the banks have been kind of damaged. Some of the banks got bankrupt. Some of the banks got acquired, but we've gone through. And we did find a path after this crisis to once again, deliver growth. But here, this is another crisis. It's a behavioral, it's a consumer crisis, where as well, we are changing habits. We're now, for many of us, working, digitally, working from home. And this is very new. And obviously we need to adapt to this. Now at Salesforce, I want to tell you about what we have done as a company, through this crisis. First of all, because this is so new. So as a corporate, obviously we have our key values of trust and customer success and innovation and equality and giving back. But here specifically in COVID-19, I think we have decided to be re-insisting on our equality and giving back values. And one of the first things that we've done is, first of all, we said we need to support financially our communities. So we have done obviously donations to our public hospitals, where we are, whether it's obviously UCSF in San Francisco, but we have done as well locally in Israel, donations to the Magen David Adom. And we have been engaged in so many donations around the world, just to make sure that we support the local community. Now, the second thing that we have done, we have invested a lot in supporting as well state and government. And one of the things is what we have done, we've been engaged into sourcing and donating personal, protective equipment, PPEs. And as you see here on the screen, we've been, massively investing our time and effort in sourcing around 50 million PPEs. And as an example, give them, to the state of New York. So we're super proud of this, but these are the real thing that the company's really been investing, into helping to stabilize pretty much businesses and government around the world in this phase one. But then the last thing that we have done, which is not the least, is obviously we have used our technology to better support, both government and obviously companies to go through the crisis. So whether it's about, using, our software to kind of set up a virtual call center, support a ministry to better support its citizens, that's what we have done. And we have done this in so many cases, in so many countries around the world. But it's as well how our business, as our technology has been used to support small businesses to go through as well, COVID-19. So all of this to say that we've been here, we've been, stick obviously to our values of equality and giving back. But now I want to speak about how we as a business perceive those changes and transformation affecting obviously financial services. And as you know, Salesforce as a company is a company that has been supporting thousands of customers, within financial services. It doesn't really matter if you are a retail bank, if you are an insurance in terms, if you're doing PNCs, or if you're doing life insurance. It doesn't really matter if you're into wealth management or lending. We are pretty much supporting all types of businesses around the world and all types of business lines within financial services. And obviously, if you're a fintech, we are as well a partner to you. So we know this, and we stick to drive customer success with all kind of financial services businesses. But here, what I want to really highlight is what we perceived, the feedback that we have received from from different banks and different financial institutions around the world that have been kind of really challenged by COVID-19, and many response that some of them have actually decided to do. So one thing for sure, everyone will not argue with me that this crisis, because of his sense of locking down countries and locking down businesses, has actually forced us to work from home and work digitally. And that's pretty much the same expectation that this crisis actually given to the customer. The customer today, thanks to this crisis, is more and more, demanding institutions to work digitally and efficiently, with him. So we have seen many cases, and I think one of the big cases that we've seen, and you may have written in the paper, this large partnership that we have done with Standard Bank in South Africa. We have seen the bank, looking at the countries locking down, but then thinking of how to better invest, to go faster digitally in order to better support their economy, their businesses, their consumers, and obviously their employees. So many customers have made decisions. Standard Bank is a great example of a bank that decided to go faster digitally to, first of all, better support their ecosystem, but as well already prepare, their way to actually go back to growth at some point in time. Same thing happened obviously in the US. Same thing happened obviously in Asia. Same thing happens obviously with fintech like Bank Leumi and Payroll, to which we actually team up together. But again, here again, many response, many CEOs, many decisions. I think the most important is that decisions were made not to go back, but actually to move forward. And here, that gets me to pretty much, what we see as a digital imperative, what we see and what we feel. So as I said, we've been locked down, businesses, governments, countries, and all of a sudden, for the consumer, it becomes a digital imperative. People wants to be able to interact, using, digital channels on their mobile app, on WhatsApp, whatever. But they want to use digital to engage, because that's the only mean that was actually left to them to engage pretty much to the brand and to the financial service institutions. The second thing that has emerged is obviously the rise of digital communications. How now you turn on your physical meeting into a digital or video conversation, just we're having now. And as well, the other imperative, with respect to the employees, is how, now organization, banks, insurance, fintech need actually to provide the right tools, to the employees, first of all, to ensure business continuity. But the second thing, to better support their business processes and keep on obviously delivering services to their ecosystem, to their partners, and obviously to their customers. And with that, I would like now to speak about two other trends that we have seen, which drives today obviously financial institutions to actually urgently adapt. So one of them is fintech. Okay, we've seen obviously the birth, and I would say the market share taken by fintech like N26 or Uber Money, or very recently with Libra. But we've seen like new people now taking a market share. We've seen Revolut in the UK, for example, now having like a license for a bank, and all of a sudden now with their very disruptive mobile banking services starting to take market share in pretty much every single market in Europe. So all of this is obviously putting a lot of financial services or financial institutions under a lot of stress to adapt, because they need to be as agile and they need to be as digital as pretty much as the fintech. The second thing is, how as a financial institutions do you obviously work, you manage your workforce now work in a hybrid mode. How do you cope with the fact that now you cannot return 100% of your employees to work? And how are you going to manage pretty much your employee shift? How are you going to manage the fact that you cannot receive or host or every single customer into the branch? So how do you cope as well with this? How do you cope with the new normal where you have a hybrid workforce? How do you maintain your people, first of all, the well-being of your employees? How do you maintain your people productive, working from home or working remotely? So how do you ensure all of this and you keep obviously a good face of productivity, of performance, and obviously customer satisfaction? And for this, I want to say that at Salesforce, we've been investing, as I said, a lot into supporting, business, during COVID. So that was obviously phase one of, countries locking down, businesses locking down. And now we're obviously in this phase where in this new normal, we have kind of, for most of us, engaged into a reopening phase. It's even actually happening to us. But we are readapting. We can obviously return most of our employees. And how now as an organization, we are kind of supporting the next normal. How do we as a company at Salesforce, how do we see the next normal? How are we going to help you as a bank, as a fintech, as an insurance? How are we going to help you with our tools to pretty much support your next step of growth, into the next normal? And with this, I would like to end with the fact that in each of those phases, okay, we have provided the solutions. We have been here a catalyst of innovation, where in phase one, we brought Salesforce Care, to support, the stabilizations of your company, in the phase one of COVID. We are already in phase two. We came up with work.com that was actually designed to help, businesses, reopen and readapt to that, I would say, to that new normal. And we are already there ready, for the next normal, for the next path of growth, with our 360 family of products to, again, help you, again, engage, service and marketing, obviously, do commerce online. So we are there already for you. And we just hope that, that grow your business phase is going to be, as soon as possible for you, for your businesses. And we're just here to support. So thank you for your time today. Looking forward to partner with you, whether you are a bank, an insurance, or a fintech company, and looking forward again to interact with you in the near future.
Hello, everyone, and thanks for staying with us. Next, we have a fascinating panel discussion on collaboration between fintechs and financial institutions, tech companies, and banks. especially in the age of coronavirus. It's going to be a fascinating panel, I promise you. Hi Maya, hi Sagiv. Thanks for joining us at this first virtual panel for Fintech Junction's virtual event. So why don't you two introduce yourselves shortly and explain exactly what your company does, what you do at your company.
Hi Ben, I'm the general manager of Finastra Israel and also the general manager for the payments business in Finastra globally.
And what is Finastra in 2 words?
Finastra is the third largest fintech in the world. We serve about 8,500 banks around the world, $2 billion yearly revenue, 11,000 employees around the world, providing vast breadth of product to financial institutes.
Impressive. Thank you, Sagiv. And Maya?
Maya Rapoport, the VP product at Pepper. I lead the product, data, and design team. We are building a new banking experience in Israel. We are the first mobile digital bank in Israel, part of Leumi Group. And we want to change the way people manage the money and help them better manage it.
Great, thank you, Maya. Okay, so let's start with the first question, and it deals with acceleration of innovation, technological innovation. We see now acceleration going much faster, due to the fight against coronavirus, COVID-19. So in your companies, in your personal experience, in your clients and partners' companies, maybe you can share some examples to that.
I think business once mapped their digital strategy in a year to 3 years, and due to the corona, they were obliged to do it in weeks or even days. We can see that the impact on the industry is huge. We can see it very well in the healthcare industry. We can see it in the deliveries. And when I'm saying deliveries, it's not that 55% of the customers saying that they keep doing this, buying grocery through deliveries. It's the main functionality that will change later the way we buy. We can say it. It's not like it's in the music industry. It's not like streaming or VOD. It's not just a functionality. It's going to change the other layers that are on top of it. If we are looking at the financial industry, we can see that banking are very advanced in their digital solutions. They have many self-service in their digital channels, and I think the most impact of the COVID-19 is on the customer point of view, that forced to use the digital services, and it's bringing new customers, new profile of customer that didn't use the digital before. So the main impact on banking is in the customer point of view. If I'll take the challenger bank, the digital bank in Europe, in the beginning of the COVID-19, everyone said that this is the opportunity for them to shine and to show the world how the digital banking is overcoming all the obstacles. And we saw it's not so easy. And there were many criticizes that the growth that everyone thought that will be is not here yet. The corona, I think, emphasized three challenges to the challenger or the mobile banks. One is that it's a new profile of customers that need more confidence, and the trust issue is very important for them, and the conventional banking has this trust. This is the main strength they have over other fintech or other challenger banks. And I think that was a big challenge for challenger banks that have private investors and don't have the back. Something that Pepper doesn't have because we are part of Leumi Group, and this problem we are not facing. This is why we see growth in our customer basic and a new customer profile. The second challenge is I think the criticism and the pressure made investor pressure the challenger banks to show more revenue stream, and there is still a challenge to overcome the business model for digital banks, especially if it's now more on credit cards and the usage in the Corona time had decreased. And the third challenge that we feel also in Pepper that we have is people, it's very difficult to explain customers the difference between a functionality in a digital bank, what I call it a self-service in the digital channel, then a whole experience that changed the way you act financially. The third challenge is explaining the customer. This is a challenge we have also in Pepper, the difference between functionality in the digital channel than a whole experience that changed the way you act financially.
Okay, thank you. So Sagiv, how has acceleration of technological innovation?
I think similar to what Maya said, we are saying in Finastra that the COVID-19 brought the future forward. So digitalization that we expected that it will take over multiple years will now take over 6 months. So things like self-service and digital payments is definitely something that we see acceleration. We see acceleration also in the areas of risk because of the financial situation of many SMEs, enterprises, even consumers. We see machine learning and AI getting into calculating risk, into machine learning and AI into fraud. These are areas that we definitely see, and we are investing ourselves in technologies in those areas. And also because of the general pressure on TCOs for the financial institute, we see acceleration of moving to cloud. We see many banks sunsetting tennis court size data centers and moving rapidly into cloud. So these are the areas that we see mostly.
Great, okay, so from acceleration to collaboration, let's talk about some examples of collaboration between fintechs, other technology companies with banks and financial institutions. Sagiv, you run a marketplace, among other things, so you must have experience in that area. And Maya, perhaps at Pepper, you have seen some collaboration yourself.
Yeah, so indeed, Finastra launched a year ago a marketplace where we are connecting fintechs and SIs and developers, banks into the core systems, whether it's payment or treasury and capital markets, et cetera, et cetera. We definitely see in this area, we see a bigger need for collaboration, whether it's technological or banks need to move quickly and change directions. The more challenger the bank is, the faster it moves. There is much more openness now than in the past in order to get fintechs into the ecosystem. However, without a platform or a marketplace, the integration is very, very costly and difficult and slow. And that's why we see now that there is more openness and a need to move faster and change also because of COVID-19. Banks are adapting to the new situation, coming up with new products. We see marketplaces getting more traction.
I think COVID-19 gave us a glimpse to the future overnight, where the digital channels are becoming the primary or not the sole customer engagement model. So digitization is not enough. You need the second phase of customer experience, and the traditional industries are now in the first phase of digitization, and the fintech and the startups are building the second phase of customer experience. So I think the corona will accelerate the need for better collaborations and do it fast, as it said. So I think it will be faster. The customer expectation is much higher. Everything is much faster. I think most of the industry already understood they need a collaboration to scale and to do more and fast and in low cost. But now they need to do it faster.
So we spoke about marketplaces and the challenges that they solve, right? Perhaps you have an example. I don't know if you can name names or just tell us about a recent collaboration that you saw that can be interesting for the audience to learn about.
Yeah, there are many examples that we see on collaboration. I talked before about artificial intelligence-based fraud. So we are now connecting our payment system into a fintech that is specializes in fraud. We are connected into a risk management areas, into compliance. We have multiple companies that we are collaborating with them in the areas of moving to cloud and cloud-based integration. So there are many examples of fintechs that we are collaborating with, and we are inviting the entire fintech communities to join us and connect to us through the platform, that we can enrich their portfolio and give a better services to the banks that are joining also this platform.
How long does it typically take, for a collaboration to, go live from the beginning to, let's say, one of those examples you talked about, AI and risk or fraud?
So I'll take recent examples where we collaborated with a company that is doing real-time cross-border payments, which is usually a cross-border payments take 3 to 4 days. We are talking about real-time cross-border. We did the whole integration in a hackathon in 2 days. So after 2 days, we could show end-to-end service running from bank all the way to cross-border payment into the fintech. It was
so the
amazing.
Technical integration was faster than the actual movement of money before using this technology.
Yeah.
Crazy. So Maya, as the VP product, you're probably monitoring the usage of your products, your features, your services. So what has changed? What's different now than 6 months ago in consumer behavior? I mean.
Yeah, I can say that in Pepper, you see it's a very growing market, and even in the Corona period, people didn't stop opening bank accounts, and the growth is in usage and in opening a bank account is still high. We see a new profile of customers that are a bit older and less savvy digital. And I think the biggest growth that we see in this period is in the investment. In the investment app we have, we see that new customers, 18 to 20, that are starting to use our app and to start to learn how to invest. As Pepper, we always wanted to give an experience that helps customer understand what he do, and the investment is very painful area that is very difficult to understand. So we see a huge growth in usage and a new customer base that starting to invest money in small amounts and then in bigger amounts. So I think for us it's a period of growth.
People have a lot of free time.
And it's very important for us to give them the simplicity they need in their processes, and to learn how to do it better and to keep them safe.
Why don't we end with a question about your advice to other leaders or our audience is working, they're working at banks or other fintech companies, what should they do to survive these uncertain times? What should companies do? What should people do really to I guess, ensure that their future is still bright?
First of all, take care of your employees. It's true that it's now an employer's market, but I think you need to remember that at some point it will become an employee's market, and your employees will judge you by the culture that you had during this crisis. So I think none of us should forget it, that employees at the end of the day, they are the most important assets we have. We are in a people's business at the end of the day. The second thing is, I think it's leaders need to keep being courageous. They need to keep on investing and maybe do it smartly, maybe starve oxygen from where you have a business that is not growing, and pump oxygen to areas which are growing, but keep on investing, because now there are not less opportunities during this time than it was before, and this is the time to drive your business forward.
I will use Stephen Hawkins, what he said. He said that intelligence is the ability to adapt to change. So don't be afraid of the change, and go with it, be flexible, be compassionate about your customers and about your employees. And this is the time to be focused on customer and employees' experience.
I think that in your case, people didn't like to go to banks and stand in line before the corona, and they obviously don't like and can't do it now. So it is the time for, mobile banks, challenger banks to rise, to grow.
Yeah.
And for the people who provide them the software.
Of course, the enablers.
To collaborate.
Without you, they will not exist, and without you, I don't know, we will not be able to bank, right? If we can't go to a physical bank.
They will help us to scale.
Exactly.
And to do it in low cost.
Exactly.
Always low cost.
Okay, so thanks a lot, and we will see you at our next edition, hopefully within a few months, of another virtual event for Fintech Junction. And thanks for joining us.
Thank you very much. Stay safe.
Thank you.
I'm here today to talk to you about a maintenance nightmare or a competitive opportunity. All of the data that we're seeing coming in from the digitalization, coming in from the need to work at home, coming in from all of the new retail elements that are available in the finance industry, coming in from banking, insurance online, and so on and so forth. So let's jump right in. I was actually out jogging in the Tiergarten in Berlin, and I came across a statue on the way back to the hotel, and it was Alexander von Humboldt. And what did he say back in it was approximately 1821. So he said, "I saw with regret, and all scientific men have shared this feeling, that whilst the number of accurate instruments was daily increasing, we were still ignorant." Remember, we're talking 200 years ago. So what's happened 200 to 300 years later? Has the situation changed? Actually, it's only gotten worse. Why? Because we have all of this financial data coming in. We've now been growing exponentially with Corona hitting us and COVID-19, and we're now working at home. We have all of this new data coming in on top of it, and only 10% of that data is analyzed according to the industry analysts. And you can see on the table on the left that as we increase in data, we decrease in the percentage of data that's analyzed. So if we start off with 100 terabytes in our data lake, and we're able to analyze 10 terabytes, that's 10% of the data. But as we get up to 500 terabytes, a petabyte of data, 10 petabytes of data, we're talking only 0.5% of the data that we have that's actually analyzed, which means 90% of critical business insights are being lost. So what's happening? The common struggles that companies are having, whether it's banks on Wall Street, whether it's in Canary Wharf in the UK, or any of the big insurance companies across the world, What are they finding? Their data engineers are suffering. It's taking them 60, 70% of their time, sometimes 80% of their time to prepare their data, just to analyze that data. And they're struggling with long-running queries. So queries are taking days, sometimes many hours, and they're not able to actually execute those queries because those data queries, those data analytic queries, are being shut down by the IT department because they're taking too long and they're taking up too much resources. So what are they going to do about that? How are they going to liberate their data? Well, there's ScreamDB. This is a product that we have. We are a provider of a data acceleration platform to help companies to analyze much more of their massive data and to analyze that data much more quickly. And we do that using, you could call it our secret sauce. We created a columnar database that was built from scratch to run on GPU processors. These GPU processors are some of the fastest processors in the market today. So you are able to gain massive scalability. It's an SQL database, so you can use the standard SQL you've always been using. And it's extensible for machine learning and artificial intelligence, and I'll give you an example of that in a minute. Minimal footprint, that means with one GPU, with one server with 4 GPUs, you can get up to 20,000 cores of computing power, which makes it lightning fast also to ingest the data, also to compress the data, and also to analyze that data so you can get critical business insights really quickly. So if we look at the example that I told you I would show you, so you can see here a major bank in Europe which has improved significantly their risk management capabilities, because what they're doing is they're taking data out of Hadoop that used to take them a day and a half to run certain queries that they had. They're inputting that data into our Scream columnar database that's running on GPU technology, and they're breaking down and segmenting that data to input it into their AI models. So what they're doing is now they're able to test those models. They're able to create models that are able to then provide them with the best possible risk analysis that they're able to get. And it's significantly increased their risk management to the point that they're able to save hundreds of thousands of pounds a year just on the ability to decrease the risk that they're taking in their banking system. So let's see what Gartner says about Scream. So in their recent report in January, selecting SQL engines for modern data workloads, they said, ScreamDB is architected for massive data stores. Forget about big data. Big data is history. ScreamDB is architected for massive data stores, and it adds enhancements to the data warehousing lifecycle, and it speeds up data ingestion. This is the Gartner organization talking about Scream. And finally, I'd like to leave you with something that we're doing for the community, because we're all suffering from what's happening around the world with COVID-19. So we're working together with various groups around the world. We've actually provided free licenses of Scream in order to help organizations to crunch that heavy load of data that's coming in about COVID-19 from all over the world. And we've offered free licenses for government agencies and for hospitals and any other organizations that are working to conquer the coronavirus, and we are offering that for free to those organizations. So I'd like to leave you with today just one last message. Remember, data, big data is history. Massive data is the era we are now in, and it doesn't matter if it's finance, it doesn't matter if it's telecom and 5G, or retail, the explosion of retail and online buying. Massive data is here, and if you're not yet handling your massive data inside your organization, you should be, because your competitors will be. Thank you very much.
Hi everybody, my name is Yossi Arconi. I'm the founder and CEO of Robin. We are here today in the Fintech Junction online webinar instead of the annual conference held in Hilton next to the beautiful beach of Tel Aviv. And we are here just because of the coronavirus. The coronavirus is changing the world. Most of the changes are perceived as negative changes. I believe it might take some time, but some of those changes are gonna be for the better. Industries like real estate, transportation, energy, employment, and of course financial services gonna benefit from the coronavirus. For us at Robin, the coronavirus helped us accelerate the change we started working on last year, moving from B2C to B2B, from app that serves more than 150,000 users to an online international platform that helps anybody in the insurance and pension value chain to offer their customer end-to-end solution, fully digital, under their own brand. We found out that working on a lean startup mode helped us overcome the crisis, the corona crisis. So we decided to take it to the extreme, to the next level, and decided to implement what we call ultra lean startup, where instead of working with our own technological leaders, UX, UI, product managers, programmers, we have decided to outsource all our R&D to external integrator. We were lucky to find Aman Group, the leading integrator in Israel, specializing on financial services, to become our partner. And together we are continuing to implement the solution here in the local market in Israel. Now we are looking for the same model to work outside of Israel to expand our businesses, and we are focusing on finding integrators in Europe. So what does Robin do? The platform automatically collects all the insurance products that the customer have, long-term saving, pension, retirement, and present holistic portfolio for the customer. Each product is checked against the customer needs, and if a better alternative is found, a recommendation is sent to the customer. The system also enables to execute all the recommendations within the app with just few taps. These services are offered now as a digital broker as a service platform that you can offer your customers under your own brands so they can benefit from the service. The platform supports multilingual, multi-currency, support different regulation, and the implementation and customization can be done within just a few weeks with the help of our integrators. Let's watch a video describing how the platform works.
Once the app has been downloaded, users reach the registration and authentication stage, designed to protect the user's privacy. The most convenient and secure way to verify the user's identity is through a simple selfie picture. Robin compares the user's ID to the selfie and locates all the insurance and pension plans on behalf of the user, without him having to add any data. Within 72 hours, the data collection process of the user pension plans and insurance coverage is completed. In some cases, the system identifies funds that the user is unaware of their existence. With Robin, the user can always know his financial situation. Robin presents all of the savings and insurance plans. Suitable plans for the user are checked and marked with a green heart. Plans that are not optimal or unnecessary are marked by Robin with a red heart. Robin recommends the best options for the user to upgrade his financial situation. The user can choose to implement those recommendations independently, 100% digitally in a self-service method through Robin. The user will need to simply fill in any missing information required to continue, approve the recommendation, or alter it, and sign. The process is completed. It's as simple as that. Robin will produce all the required forms and send them to the relevant individuals. The user can also choose to speak with a human expert at a click of a button, which will answer any question. All these options are to the user's selection.
All those services are offered now on a standalone platform, Digital Broker as a Service. You can offer your customer end-to-end solution, fully digital. And I can tell you, customers are already there. The app is ranked with 4.8 stars on the stores. Customers are making transactions, and more importantly, they understand their finances. They have it on their mobile. So if you want to join the digital revolution, you are more than welcome to join us. Thank you very much.
Hi everyone, my name is Alan Blanchard and I'm the country head for the UK here at APX. We are a regulatory technology or RegTech startup, and what we do is we make it radically simple for everyone to comply with regulations. And it's a real pleasure to be here with you at Fintech Junction, and I'd like to spend the next 5 minutes talking about growth. Now, you're obviously going to ask yourself, why does this RegTech startup want to talk about growth? Because we work with a lot of startups, especially in the fintech space, and in preparation for this event, we asked a number of them about their main growth pains. And here's what we learned. The top growth challenges for fintech startups are funding, finding good people, and defining the right go-to-market strategy. And this list definitely makes sense, but we also realized that something was missing. Because from my experience when working with clients and partners, I see one important additional challenge, and that is regulatory complexity. Why regulatory complexity? Well, actually, this is fairly straightforward, because as soon as you as a fintech want to offer a service or sell a product across multiple countries, restrictions from different jurisdictions and regulators kick in. And I'm sure everyone is aware of this. Regulation is definitely a huge pain across all major industries. In the financial service industry alone, compliance costs accumulated to $100 billion in 2016. Now, I'm going to give you 3 specific examples of how we might support growth here. So firstly, imagine you're a challenger bank and that your main growth hack is to hand out free credit cards. If you can't master the regulatory restrictions for offering these credit cards in every single market, you will not be able to grow across borders. My second example applies to essentially any tech startup offering its services in the cloud. Did you know that non-compliance with GDPR, the data protection regulation in the EU, can lead to multi-million euro fines? Therefore, as a cloud service provider, you need to understand the data protection rules in the countries you operate. And my final example is for robo-advisors. In many countries, the investment advisory process is one of the most regulated financial services. Marketing rules, product distribution rules, suitability rules, the list goes on. So if you want to scale your robo globally, you have to develop a smart process of complying with these complex and ever-changing rules. But where's the problem here? You can simply go to your preferred lawyer, obtain a legal opinion, pay them €20,000 per country. That's no big deal, right? Well, we do not think this is okay. And by now, you might have guessed it. This is exactly where APX fits into the picture. At APX, we want to change the way companies deal with regulations. We transform written regulations into digital compliance rules, giving your growth hackers immediate answers to their most pressing compliance questions and empowering your tech team to create software that is compliant by design. We offer you digitalized compliance rules from leading content providers, easy access to these rules, and everything you need to digitalize and customize your own expertise. Now, none of this would be possible without a great team. And at APX, we are a team of more than 35, combining exceptional legal and compliance expertise with outstanding tech capabilities. Our mission is to give everyone easy access to compliance knowledge and to enable companies in an increasingly regulated economy to stay focused on their core business objectives, delivering high value and unique experiences for their customers. The RegTech revolution is happening right now, and we would love you to be part of it with us. Thank you very much for your attention.
My name is Koen, I'm the CEO for Blanco. We are a fintech company which is almost 5 years in business, and we managed to get 150 financial institutions on our platform. And these 150 financial institutions, they're predominantly asset managers. And they go from a family office to a financial planner, an independent financial advisor, a fund, a pension fund, a retail bank, up to a private bank. And they have all one thing in common, which is they try to accumulate wealth for the end customer. And that's exactly the market we are in. And that's the reason why we exist. But this industry is in troubles, namely for three reasons. The first one is there's a lot of digital revolution happening in our industry, but unfortunately the smallest find it very difficult to cope with that versus the bigger ones. All of the asset managers are coping with price pressure at the moment. There's pressure on the margins. Think about, in the US, you got a Robinhood who provides transaction costs for free. This obviously has an impact on the end customer. And then you got regulations. Regulations are an unfair battle because they're more difficult for the smaller ones than they are for the bigger ones to cope with. I guess the answer is technology. Are we going to be replaced by robots? Well, I don't think so. I think it's going to be a symbiosis between man and machine, where a machine will bring efficiency, cost saving, new products, innovation, and women will bring empathy, relationship, the client. And guess what? You need two to tango. And that's the reason why we have developed a whole new scalable platform based on latest technology. But it's actually about the end client, the asset manager, that they can actually look the client in the eyes and find the time to find a good solution. We are invisible. We are a B2B company and will always be so. We will never be in competition with our customers. So what have we developed? Well, we have developed a state-of-the-art digital asset management platform which is scalable. And it has two big parts. On one hand, you got an investment suite and a KYC suite. In the KYC suite, we also onboard other types of financial institutions. We do digital onboarding, multi-channel, remote identification, due diligence, anti-money laundering, contract generation, digital signing, flexible surveys. Well, you name it, it's all in that platform. In the second bit, we have the financial investment plan, which we couple the profile of the customer with the solution of the asset manager. In the third part, we have a client file, and the client file is central because there you can see all the data. But for the asset manager, it's actually a continuous monitoring tool for compliance and risk. In 4 and 5, the PMS, the portfolio management system, we managed to bring robo-advice in an active way. But we also connect the data from the outside into one single format. You hear it right. It's PSD2 for investments already happening in our markets. And 5 actually sends transactions to the market. It's about best execution. So we offer a full-fledged solution for any bank or financial institutions. And it's modular, so you can pick and choose. If you got any further questions, I will be happy to take them. Thank you very much.
Hi everyone, my name is Yves Cohen and I'm the CEO of Pageland, which specializes in frictionless digital payments and banking fraud prevention. During the last few years, the way we transfer money, buy online, buy in store, pay our bills, and do other financial services has just, changed dramatically. And it will keep changing because the world is going cashless. We are seeing a significant increase in cashless transactions. Just, in April, we saw 200% jump in mobile banking registrations. And it's not just banking, it's banking, mobility, retail, transportation, energy, and many other areas. Now, this is also attracting clearly fraudsters because fraudsters always follow the money. And if last year the market experienced more than $16 billion of fraud losses, this number will not remain like this. It will grow, and it will grow significantly in the upcoming years. And it will also grow due to COVID. COVID has changed the world. And COVID has made people stay at home, locked down. This means that there is no other way to transact and transfer money and pay by using remote operations and using mobile devices. When fraudsters tend to launch and execute their attacks, they have all sorts of tools for doing this and doing this quite effectively. For example, opening fake accounts. New account fraud is a great way for them to fly under the radar of the existing KYC solutions and opening new accounts. Two is also stealing debit and credit cards, which they've been doing for many years, but when it comes to mobile, for example, it is much easier for them to conceal their operation. And last but not least has to do with account takeover. Even though it's been here for quite a while, phishing and social engineering is very effective for them. And they're able to just target new victims and make it look like it's a new attack every time. Now, adding more and more security controls is definitely not the answer to reducing friction. To the contrary, when we look at, for example, the shift from incumbent banks to challenger banks, we see that the strongest driver for people to do that is the easiness of opening a new account. But when it comes to the real user experience, that's only 11%. So there is lots of room to enhance, and it has to be enhanced in order to increase the adoption of the new customers, acquire new customers, and making sure that the conversion rate is improving. So the question that comes up is it really possible to balance among reducing fraud or avoiding even fraud, also enhancing the user experience by reducing the friction, and doing all that without breaching our privacy? The answer is absolutely yes, only that the approach needs to be different. It has to be fast, it has to be effective, and it needs to be easy and simple. By fast, we're looking at a situation where we can no longer wait for a new system to become productive and be able to predict fraud after months of operation. It just doesn't make any sense. Today, when you switch on the system, it needs to immediately detect abnormal and fraudulent attempts. Two is really the effectiveness. And when I say effectiveness, we need to look broadly at various factors that include, one, the device, the ability to indicate which device it is, which user is currently using the device, whether the device is involved in any criminal activity or in any fraudulent activity, and connect that, link it to the user behind the device, and analyze the behavior of the user. For example, what is my spending habits? Where do I buy? What is the amount, the time? Who do I transfer money to? And many other factors that are related to me when I transact. Of course, also my behavioral biometrics. How do I hold my phone? With my left hand, right hand? What is the pressure that I put on the screen? And all my unique physiological characteristics. And three is the way that I interact with the application. And all that, again, is unique to me as an individual. So if a fraudster tries to steal my phone, my credentials, my identity, my card, they won't be able to complete this transaction successfully. And the last part has to do with making it easy. I mean, the integration should not last more than just a few days. The times where all the cumbersome integrations, took weeks and months is no longer here, and definitely not in the new cashless arena. So it has to be fast and it needs to be completed right away. So the combination of all that is definitely the answer and the solution to reducing the friction, supporting the adoption, and without reducing the fraud losses, the risk, and avoiding such cases. Thank you very much and stay safe.
Hello everyone, this is Ram Shoham from Frankfurt. I'm founder and CEO of Accelerator Frankfurt. Accelerator Frankfurt has been voted as one of the top 25 global innovation labs, mainly based on our experience and track record. Talking about the track record, our startups, 85% of them get invested, and about 55% of them get clients in the German financial industry through our network. So not surprising, the title of my presentation today is How to Accelerate Your Business Development in Germany. Because this is what we do at Accelerator Frankfurt. We are a go-to-market program utilizing our network to the financial institutions here in Frankfurt. I'll get back a bit about my background, but shortly about our agenda today. I want to talk about why is Frankfurt really the gateway to the German financial industry. how to reach decision makers in the German financial industry, and then the importance of GDPR. And I wanted to touch on this topic because I've seen many times that this becomes a deal breaker. Even if the company, the startup, has a great solution, everything goes well, compliance usually stops it when they see deficiencies in GDPR issues. So yeah, Frankfurt, you see a picture of Frankfurt and the surrounding area. It's a lovely city, a great airport to be in. A little bit about myself. I've been 20 years now in the financial sector, a little bit over 20 years. The first 10 years I was actually based in Hong Kong, working for an investment bank. And during the financial crisis back in 2009 is when I moved into entrepreneurship, firstly as a business angel, investing in companies where I can add value, connect them to larger investors, and especially to the banks. So not surprisingly, the portfolio of companies that we have are mainly fintech, regulation technology. There's a few blockchain companies that we work with, and cyber security. So why Frankfurt, and why did we set up Accelerator Frankfurt? Obviously, there's financial hubs around the world. I arrived to Frankfurt about 2012 directly from Hong Kong. And I realized that if you want to actually succeed in bringing a solution, a product to a bank, you need to talk to decision makers. In Hong Kong, at the time, there were a lot of foreign banks, international banks, but their head offices were not there. Excuse me. So you really need to be where the head office is. You need to be where decisions are being made. This makes London, for example, and New York excellent hubs, plenty of banks, plenty of decision making there. But obviously London and New York were quite saturated, while back in 2012, Frankfurt was not really considered a startup ecosystem, did not have anything. So we came to Frankfurt finding our blue ocean. There were about 400 banks. There were not a lot of innovation labs or innovation managers. So we were here to bring this to the banks, to filter startups on their behalves and then help integrate it. So the good thing about Frankfurt is, as I said, decision makers are here for the major German banks. And I don't need to stress that the German economy, once you're in for good. And it's a stamp of quality where you can expand to the rest of Europe, I would say. So moving on to the next slide, how to succeed in Germany. Look, you need to, of course, find the right partner from the corporate side. We've been here now for so many years, so we always identify these hidden champions which are within the bank. And these people actually make things move. It's very important to identify these people. You need to be prepared a lot for the German culture, which actually clashes quite a bit with the Israeli culture and the Israeli way of selling. Because I'm Israeli, by the way, so we Israelis, we want to go directly to the point, no bullshit. But the Germans, while they want to do that, they're very risk averse. So they want to first make sure that everything is covered. There's minimal chance of reputation damage or loss. So very, very important to be patient and build the relationships throughout time. This is where I write, be present and have patience. Obviously, as Accelerator Frankfurt, we've been here for many years and we've built that reputation, and that helps to accelerate sales cycles within the German financial industry. One of the points there, you see digital marketing. We stress the importance of having the right communication to the clients. Normally, when I want to present a certain startup to a bank, I have a call, I have a meeting, but it's always followed up, okay, send me some material. Because the right person, this hidden champion, needs to use this material within the bank to be able to bring it further to all the stakeholders. So if you don't have the right communication tools, you're going to find it very hard to expand, especially if you have it in German. That's a big plus. And by communication tools, it could be like a one sentence that explains what you do, as opposed to 35 slides where it gets lost in translation. And believe me, the people at the banks are quite busy and they will not take the time to go through such amount of slides. So really a concise message and your communication strategy is extremely important. Corporates here in Germany want you to have track record. They want you to be reliable and trustworthy. I would say to penetrate the German market, it would be good to have existing clients already in your home market. You should have over 15 employees already, so not very early stage startups. That would not work. And this track record really helps accelerate penetrating the market. So if you're still too early stage, I would definitely not recommend to start with Germany. So our acceleration process has been usually that the startups come once a month for about 3 to 5 days for relevant meetings. Obviously now with COVID and travel restrictions, this has not been possible. So what we decided to do is to do the whole program online. Here you see a picture, for example, of one of our blockchain regulation technology startups, Valega Chain Analytics. They're presenting to 2 bankers and 2 investors. And this is what I want to highlight here, what's quite unique. The investors actually get to sit in a sales meeting. They get to see how the startup sells their product. They hear what the client is asking, and vice versa. The investors get to ask their questions in front of the client. While some people consider it, wow, this is really off limits, risky, we found it to be the best way to build trust. Not only that, we took it a step further where these online meetings were live streamed. So people could tune in and could watch the videos also on YouTube later on of these meetings. It's the only way, in my opinion, at the moment, where you can't meet people face to face to build some sort of trust, some sort of relationship. Having done that past May, it was a huge success. So the startups did get clients, the startups did get invested, and Accelerator Frankfurt managed to stay within its KPIs and high standards. So this is what we're doing now. We're doing an online acceleration process. But it's not only through Accelerator Frankfurt. I would recommend, if you're a startup, if you want to penetrate the German market and you have the right connections, then invite your investors to sit in your online meetings and to see it. It gives a lot of credibility for both sides, for the client side and for the investor side. So yeah, finally, the last slide about GDPR and an opportunity. It's basically an opportunity for startups. It's very important to note that if a financial institution is non-compliant with GDPR, they can get fined up to 4% of their annual turnover or 20 million euros, whichever is greater. You need to remember that it's not the startup that will get fined, it's the financial institution working with that company that will get fined. So it's very important that this will be your number one priority when you start negotiations on a POC going to production with any German financial institution. I hope I don't need to explain what GDPR, the General Data Protection Regulation, is. But if you are fully in control of it and you can 100% give the safety to the financial institution that you are in compliance, it'll be a huge step forward. And this is where we've seen a lot of deal breaks, basically. So take this definitely into consideration. At the end of the day, basically with Accelerator Frankfurt, we used to, at the end of each program, our programs were 3 months, we used to host a demo day. And our demo day was not so much about presenting the startup, but really presenting about the traction that you got within the last 3 months. With who are you working, what are you doing? And as you can see in the demo day, these are bankers, basically, suits, ties. It's a very formal event. This is where it gets you to the next step to really accelerate with even more clients. I wrote here, we will be back, because unfortunately, these sort of events are not possible nowadays. They have to be done fully online. We are doing it online. We are inviting the same people, and we are keeping up with our KPIs so far. So I hope I managed to give you some insights of penetrating the German financial market. You can certainly do it on your own if you hire the right people. Be patient. Don't expect to meet the top CEO immediately. You need to go through the process of the ladder, and we'd be happy to hear from you. Feel free to contact me, Ram at Accelerator Frankfurt, or my partner, Maria. We're available for your questions. So thank you very much for your attention, and good luck.
Shalom, my name is Shmuel Ben Tovim, and I chair the Fintech community of Israel. And in that capacity, I would like to share with you some thoughts as they are reflected by the title of my presentation, Can Israel Become a Fintech Superpower? So the question I present also derives from my experience in the Fintech community of Israel, which is actually a house for all the ecosystem of Fintech in Israel. So we are not a pressure group or interest group, but actually encompass all the different views, and that allows me maybe to look at a more bird's eye view at the industry in Israel. So the question can be answered like many other questions by pros and cons. There are factors that are in favor of Israel becoming influential power in fintech, and there are others that are contrary to that. So just in a very short way, as it is presented here, the positive sectors come from our business and economic indicators, the number of players in fintech, the diversity, total investment in the sector, the multi-year growth patterns, and we'll demonstrate it shortly with some figures. There is also a local supportive ecosystem. We have a good culture of innovation in Israel, as you know. There's an appetite for risk-taking, availability of skilled talents in these corona days, maybe even more, and financial literacy in Israel is high. The cons are, of course, the regulation, environment, and other factors to which I will address later on. So let's start with the cons. Most of them come from the latest report of Startup Nation Central for the year 2019. And one of them is the total equity investments in Israeli fintech. And as you can see, the total investment has soared by very, very nice percentages from 2018 to 2019. And even if you look at the global scene, investments in Israeli fintech represents about 5% of the global investments in venture capital in fintech, which is rather impressive figure. If we move to how much foreign players play a role in the fintech investment scene in Israel, you also see rapid growth. And if you look only at the last year, you see that in 2018, 57 of the total investments in fintech in Israel came from foreign investors, and this figure went up in 2019 to 69%, which shows a very, very substantial international interest in Israeli fintech. Another very positive sign is the diversification and number of companies. Back in 2014, only 5-6 years ago, we had only 288 fintech companies in Israel. At the end of 2019, we had 529, which is a growth of 84%, very positive. And you see that they are all over the subsectors of fintech, in trading and investments, in payments, in enterprise solutions, anti-fraud, insurtech, lending and financing, etc., etc. So all these, again, are part of the bright side of the picture. And the last point I want to make here is financial literacy, because in many countries it is not so easy to implement new technology into financial services because the audience, the customers, would not accept it. But if you look at this map, of course Israel is very, very small, but I can assure you it is painted blue. It means that we are very, very high in our financial literacy. And if you want to look at the figures themselves, you can see for yourself here, number 5 globally. 68% of the Israeli population are considered to be literate in financial services. So there is a huge receptive market, and all the odds are for us. So as you could guess from the beginning, this is only half of the story, not the total story. The second part of it is how much we actually adopt novelty in the financial services in Israel, which is both a test market for the fintech industry and can be a beta site for many of them. So first, let's look at the payments area. Payments which are diverting from the old checkbooks and credit cards and all the things that we have known before. And again, it is hard to see Israel on that map, but believe me, it is barely on the last category in discussion or design, even not there that much. Many people work around it, the Bank of Israel pushes it, but it's not yet in a very, very beginning stage that we can be proud of. And of course, if you look at that map, you can see many developed countries in the world that actually implemented new methods or are in the midst of the planning stage. Another indicator is open banking, the ability of new fintechs to share, of course, with the customer's approval, the information stored in banks and insurance companies and credit card companies, and to offer the customers alternative competitive services. So again, we are missing from that map. Maybe we should have been there in process, because last month the government has offered a bill that is going to probably regulate this. This is after long work done by the Bank of Israel and the superintendent of the capital markets. But all in all, we are in an early stage. We still expect many other oppositions from the legacy players, a lot of bureaucracy, and I'm afraid we are not going to have actual facts on the ground in the near future. The same can be said about another very, very substantial reform, the reform of the sandbox, meaning to create a regulatory environment in Israel which is more relaxed, allows new companies not to be subject to the whole session of regulations. Again, this is something which has been running around for some years around the world. Again, look at the map. When you see the green dots, these are countries that have already fully implemented sandbox technology and sandbox environment and allows their technology to develop locally to a certain stage. The orange dots represent those who are in the process, while the blue ones, and unfortunately we are there, are only in a proposed stage. Again, there is a bill tabled to the Knesset very shortly. There's some discussion about it, but as you know, the devil is in the details, and although the concept of the bill is very forthcoming and very similar to international standards and to what is happening in other developed world, we still foresee many difficulties in the implementation process, and it is coming, but it's not behind the corner. So all in all, what we can see in this picture that I've tried to portray is that while we have all the elements and all the conditions to develop a very advanced fintech industry, we are still lagging behind because of regulation, because of the power of the old boys that don't give away their markets so quickly. And unfortunately, the one who lost most is the Israeli customer that is not enjoying right now services at the level that most people in developed countries do enjoy. So I hope that in future sessions I will be able to present a more optimistic view. So there is a lot to do. Thank you for listening.